Thank you for joining us on a Thursday morning. We have a pleasure to welcome you again to our quarterly market updates. We had a success in the mid-year review that we did back in July. We had over 150 participants joining us here in Phnom Penh at Oakwood Hotel. However, we love to keep doing these online sessions in between the in-person presentation so that those of you who are overseas or couldn't join us in person can still keep in touch with the market update that we provide. So really pleasure to keep seeing that there's still people tuning in our online webinar. Okay, so without any further ado, I'd like to kickstart our presentation today with the introduction to the agenda. Today, myself, Kasa, I will cover the overview of the economics and commercial real estate market, namely retail and office. And my colleagues, Mr. Dara, who is our Manager of Research and Consulting Services, will cover the hospitality and residential sector, and we'll proceed to the Q&A to welcome any of your questions that you may have. So you can even pop in the question while we presenting using the Q&A box in this Zoom format. So I'd like to kickstart with the overview, and especially with our regular dashboard that present Cambodia economics indicators and real estate indicators. At the macroeconomics overview, we are looking at the forecasted GDP growth rate of 5.8% for Cambodia in 2024, and this rate is projected to grow to 6% in the following year. And we'll talk a bit more about this in this section. Next up is the tourism indicator. Cambodia welcomed international tourist arrival up to 4.3 million just within 8 months of 2024. We see that this is a recovery compared to last year. However, there's still a little bit more to catch up compared to the level that we had in 2019. On the investment side, we saw that there has been almost $2.2 billion worth of investment into construction being approved within this first 8 months of 2024. This volume of investment, however, showing a slight drop compared to 2023. However, we see a growth in other part of investment outside of real estate and construction, which we will also talk about in the following slides. Onto the real estate market. We are looking at both commercial and residential property indicators here. In the commercial space, you can see that there's an encouraging sign in office occupancy, where we see a slight growth in taking up in office space. However, retail space continue to suppress in terms of occupancy rate, whilst the prime rents for prime projects, especially within the city center for office and prime shopping mall rent remain relatively the same compared to last quarter. In the residential market, we're seeing more activity coming up in the condo market. We have seen up to 970 units launched just within the past 3 months of 2024. And high-end sale price, however, continue to drop slightly. In the landed property segment, we still see new launches up to 250 units, although it's a major slowdown if we compare to last year, for example, and even the year before. Single villa is still being sold at around $1,177 per square meter. This is a slight uptick compared to last quarter. We also love to present, the key highlights and stories that we see across Cambodia as well as across the world, where we find it relevant to Cambodia. Main headline that we are looking at right now, including key stimulus policy that we're starting to see especially in the major economics like US and China, where interest rate is getting cut for the first time in 4 years. China's central bank are also relieving or issuing more policy to stimulus the purchase and trading in real estate market again. However, we still think that on the market side, looking at developer side, both in China and Hong Kong, developers are still offering major discount, hoping to clear out their remaining inventory. Coming into the investment end, especially in Cambodia, we're seeing that there are more activity, especially taking up in Sihanoukville. Within that, if you look at the title within the middle of the slide, government have approved another 30 projects incentive in addition to what they have done in the past. So cumulatively, right now we're looking at over 140 projects receiving a special incentive within Sihanoukville. We're also seeing more and more policy activity from the government, especially regarding real estate. We're seeing that the regulator now are very active in denouncing illegal property development or development without licenses. We also see the Ministry of Land Management launch their digital platform for land registration and other public services. We understand this is in a trial session, but however, we would like to congratulate Ministry of Land Management for this very big move. And we foresee that this is a really helpful tool if when becoming officially launched will help ease a lot of issue within real estate transaction, especially regarding the transfer, where used to take quite a bit of time or quite a long time and incur a lot of fee, as well as the transparency is quite low. However, when it comes to a digital platform, we hope that all of this issue will be eliminated. In the tourism aspect, we're also seeing more activity regarding digital initiative, where Cambodia's launched our e-visa, e-arrival card for passengers. We also see more movement into the infrastructure, major infrastructure such as the new airport, as well as the groundbreaking of Funan Techo Canal, hoping to further ease the trade and tourism movement within the country and connecting to our neighboring countries. We're also seeing increase in minimum wage for 2025. Receive an bump of up to $4 for factory workers, especially in garment and footwear industry, and many others headlines that we couldn't cover here. But I wish to highlight one last headline that just came out recently. Actually, just toward the end of September, our Cambodian government has issued further tax breaks on real estate to help boost real estate transactions and consumption within real estate. These taxes are including stamp duty tax, exemption on unused land tax, exemptions on a penalty of late registration and late tax payment, and many others, also, as well as capital gain tax for the delay into the end of 2025. Actually, our research team are writing up a summary on this tax policy. So watch out and stay tuned to receive our tax summary on this particular incentive. So thank you. I'd like to move on to another important slide talking about Cambodia GDP growth. We're presenting here are the projected GDP growth for main country, especially in APAC, Asia Pacific. Within this is a number that we collected from various sources, but when you look at Cambodia, standing at the top 3 highest growth in terms of projected growth for both 2024 and 2025. What is also very interesting to notice is that Cambodia is the only country within APAC that have higher growth in 2025 compared to 2024. The rest are major economies. However, they're facing a slower growth coming up in 2025. I also like to point out, though, that according to the IMF, International Monetary Fund, although Cambodia is expecting higher growth in 2025 up to 6%, we're still also facing a number of challenges, including a high debt to GDP ratio, especially for private debts. We're also facing increasing fiscal deficit due to the drop of tax collection, of course, leading to causing by the drop of consumption, as well as the ongoing rising of NPL or non-performing loan that are piling up across many commercial banks. So these are ongoing challenges that we have to deal with in Cambodia economy. I was encouraging to hear that the growth for next year is still very positive. Next up, we also like to talk about interest rate cuts, as we highlighted in the opening slide. We're starting to see major central banks starting to drop their rates. This is exciting news because in a very long time, we always see interest rate or growth, but this is the first time in 4 years that we're starting to see major central bank drop their interest rate, including US and China, but also other major banks like Singaporean, European bank, as well as Indian central bank. For Cambodia, we haven't yet to receive any data of the forecast of interest rate at the end of 2024. This is something that we will monitor closely, and hopefully commercial rate in Cambodia will follow this central bank rates as well. So it will help to spur more activity in not only real estate investment, but also economics activity overall. On the tourism sector, as we informed earlier, in the first 8 months of 2024, we saw an uptick in international tourist arrival up to 4.3 million. As you presented here, this is an equivalent to a 22% increase compared to 2023. However, we still have a bit of catch up to do in order to catch up with the level that we used to achieve in 2019. In terms of the origin of this international tourists, we see that Cambodia received major tourists coming from Thailand and Vietnam, up to 55%, while only 14% of the tourists are from China. This is presenting a lower purchasing power, as we can assume, as compared to what we see experiencing in Vietnam and Thailand, where majority of tourists are coming from either Korea or China, making up a quite significant amount, up to like nearly half of the total tourists. So there are a lot of more work needing to be done, especially in terms of the public relation and marketing for Cambodia tourism. And this is a joint effort needed to be a joint effort between our government and private sector altogether, as well as related associations and entities. Moving back to the investment side, we're presenting here, this is the number from Council for Development of Cambodia, namely CDC, where they publish the data of approved investment in Cambodia, and projected that there's a growth of further growth in 2024, where we can be quite optimistic about, because this is the first time that total approved investment in Cambodia will hit a 5 billion mark for the first time in a single year. So the projected investment up until the end of 2024 is projected to accumulate up to 5.5 billion, representing a 13% increase compared to 2023. And the more encouraging news is that the investment is going into a more productive sector, especially industry sector, where we see quite a huge jump. And actually, only first 8 months of 24, we already see a $3.3 billion worth of investment approved within Cambodia. The source of fund, if you're asking, is coming from majorly up to 90%, over 90% coming from China and Cambodia. It is encouraging to see that there are more Cambodian-based investment rising up within the country. I was also concerning because if you look at the diversification of this source of investment, it's still concentrated just between a Cambodian investor and Chinese investor. On to investment, but into specifically in construction sector, we see a slowdown, as we described in the last quarter as well, where we see that combining this previous slide and this slide together, we're seeing a trend of investment being directed away from construction and real estate, moving into industrial, agriculture, and tourism, where for us as CBRE, this is probably not necessarily a bad sign after all, because in the past 5 years, starting from 2019, we saw a number of actually starting from 2017, we saw a huge growth in construction sector and real estate sector, resulting in rapid growth in supply. That even right now, the market is still dealing with a high vacancy rate, and absorption is still catching up with the supply. So slowing down in construction sector is probably a healthy correction for our market in the meantime, not necessarily a bad sign after all. And hopefully this new investment injecting into productive sectors such as industrial, tourism, agriculture, would generate more consumption, generate more jobs creation, and eventually would lead up to the consumption in real estate space, whether it is in commercial or residential space. Within Phnom Penh specifically, our CBRE team have done refreshing our GreenNet data on building that are under construction. Within that, we track up to 370 projects. We might not cover all of it. We might miss some. So, however, it is still showing that there is a significant amount of construction ongoing within the capital city of Phnom Penh, especially in district like the central district like BKK, Tu Quoc, Chamkamon, and even San Sok, where numerous activities still ongoing. And noticeably, we're seeing that this activity are mainly dominant by residential sector, followed by commercial, and then the rest are other segments. These are some of the phases of a new project completed within 2024 and upcoming in 2024. We're seeing a number of projects, including commercial office such as KLK, and residential and mixed-use projects like Wuyong Town, new projects by Borei Peng Huot, Borei Chulasang, coming from a new developer, as well as more expansion from established developers such as Urban Village, Picasso, and Times Square. Last but not least, for the overview of economic, we'd like to close this section with an optimistic note, where following AmCham's survey of AmCham member within Cambodia, whether they're expecting to expand their business activity and whether they expect their income to grow within 2024 compared to 23. We're seeing that overwhelmingly the majority of the respondents representing various industries, saying that they're expecting a growth within 2024 compared to 23. Within that, we highlighted within real estate and construction up to 76 and 77% respectively of respondents expecting their income to grow compared to last year. And this business and member of AmCham also indicating their expansion, their purpose to expand their business and hiring more employee within the 12 month next 12 months as well. So this is a very positive sign for the economy. And again, while real estate is not a direct beneficiary of this expansion, it will eventually lead up to more consumption and more demand of real estate space, whether within a commercial or residential arena. So without further ado, I'd like to close up the overview section and proceed into commercial real estate, beginning with a retail segment. Within the retail real estate space, we're still seeing that in 24, supplies continue to grow, especially noticeably within the retail podium segment, where we're expecting supply to actually double compared to retail podium in 2023. In this quarter also, our team has revisited the supply pipeline that coming up in 2024 and review their completion date. And we have revised some completion date. And as you can see, this revision is presented here. So within 2024, we're seeing some project moving into 2025 as high as 60,000 square meter of retail space projected to be completed in 24, now moving into 2025. And the supply for 2025 projection also being moved. Reason for this revisit is that we still see that retail project experiencing difficulty in launching, not due to construction speed only, but also due to the take-up rate and absorption, especially now that there are major shopping mall and major retail podium within close vicinity with each other, making it more difficult for smaller projects to attract tenants, especially international retail brands. Within that, as expected, we continue to see occupancy in retail space continue to struggle, where quarterly change indicating a slight drop or relatively similar to last quarter, and quite a big drop compared to last year, where occupancy stood at around 65%. In 2024 Q3, occupancy now only stood at 58%. And on not helping, not very encouraging for retail developer also is that we're seeing that rent continue to adjust further, especially within retail podium and prime high street. Although we saw a significant uptick when in 2023, especially in the first half of 23, where we see a lot of brand getting out of retail format and going into prime high street, causing quite a big jump in retail high street rent. However, even now, because of more competition, we can say within retail segment and consumption, across the board, we're seeing a rent adjustment even within prime high street. We still see retail expansion ongoing, although at slower pace compared to last year. And within that, F&Bs are majorly dominating the retail expansion of up to 60% of new retail branch open in the past 6 months within F&B segment. Within that, we have seen some expansion from international brands such as Snow Yogurt, Hai Di Lao, but we also see expansion of local brands such as Twa Khmer and a number of other restaurants as well. Outside of the occupancy and expansion trend, we also seeing that other than that, and landlords are becoming increasingly flexible with the use of space within the retail projects. Right now, what we can see is that landlords are more willing to adjust the tenant mix within the mall and are willing to accommodate even more F&B, given that this is the current demand of the market. Some retail space, we see even wanting to convert some of their space into office use or similar type, for example, school, weekend school, gym, where within traditional retail center within experience. And trend number 2, we're starting to see that retail developer, especially smaller one like a community and a smaller retail podium, choosing to focus on specific target market rather than competing in a mass market against bigger shopping mall. This is namely a common theme that we're starting to see right now, is especially for example, retail project that's only specifically focused on Gen Z or younger population. There are retail projects that only specifically focus on family purchase, family shopping and visit and consumption. So these are an ongoing trend that we're starting to see, and we actually would like to encourage retail developer and landlord to become more specialized as well. We have yet seen in our market retail space that focus on certain segments such as let's say beauty mall or electronic mall, for example. These are other options of specialty that landlord may considering at the moment, given that there are huge competition within the retail space. So setting out different characteristics can really differentiate your project. And last but not least, we're also seeing that landlords are now willing to diversify their tenant mix even further. Whereas previously we can see that landlords are quite picky or selective in terms of the brands or the brand originate of the retailer. But right now, landlords are more flexible. Local brand expansion are also seen across the board, even in bigger shopping mall or in smaller community mall. So this is encouraging sign, whereas retail developer are being more flexible with and more accommodating toward local brands. On to the office market. We also seeing major corrections and moderations of a supply completion date. As our team presented here, we have moved some of the projected supply that were first forecasted to complete in 2024 and now moving into 2025. But different from retail projects where the reason for supply is reason for delay is majorly caused by absorption rate. In office, for example, the major cause of delay is within the construction speed of a lot of projects. As we can see here, we're also starting to see growth wider in grade A office as well. In 2025, we're expecting quite a big jump in grade A office, where we see we're expecting 1 to 2 more projects completion in grade A segment coming in 2025. Office occupancy rate has seen a slight uptick up to 4% growth compared to last quarter. However, this rate compared to same time last year in 2023 is still moderate and adjusted. Rental in office segment still continuing to suppress, especially within grade A and grade C, and only grade B CBD managed to increase their rent slightly. As we also presented in the dashboard slide, despite when we look at across the board, office rent is continue to adjusting. Projects that are located within a city center or in prime location still manage to maintain their headline rent and maintain their negotiation power when it comes to actual negotiation with interested tenant. Presenting here is data from our regional CBRE peers conducting office occupier survey across Asia Pacific. We're seeing that cost is the still number one reason for office tenant consideration, whether they consider to renew their office leasing or to relocate their office. Cost is representing the number one reason. Cost association here include leasing, rental rate, or even a capex fit out a budget that representing at the beginning of the moving. This is on top of the allocation factor. As we can see, a reason for renewal of office lease, also accommodating preferred location as the number two highest reason choosing for tenant choosing to renew as well. We'll talk a bit more about the renewal trend within specifically Phnom Penh market. As you can see here, we're presenting three other trends that are also happening within Phnom Penh market. Number one is that landlords are now being increasingly accommodating toward tenants that are willing to extend their lease. In addition to better rent negotiated, landlords are also now offering additional support such as parking or even concessions on maintenance work for their remaining tenants as well. We also notice an increasing, noticeably absent for new strata title office. Actually, the last strata title office launch that we saw was 2 years ago. So this is again, we think that this is a healthy sign, saying that no more competition entering a strata title market, given that currently occupancy rate in strata title office is already struggling compared to centrally owned offices. Last but not least, we also see General Department of Taxation issue an instruction to clarify on the practice around rent-free concession that being adopted by landlord as part of an incentive to their respective tenant. Now the instruction also clarified that allowable rent-free period, although maybe falling into different terms such as fit-out period or concession period, are kept at only 10% of the total lease term. So, for example, for a standard 3-year lease term, concession or rent-free period should then exceed 3.6 months of the rental period. So this instruction actually clarify a lot of things for landlord. It doesn't mean that landlord cannot offer more than 10%. Just saying that for tax audit reason, this is the widely adopted, or this is official adopted practice issued by GDT. So thank you. This is a wrap for for the market update within commercial real estate. I'd like to hand over to my colleague Dara to carry on for hospitality and residential market. Over to you, Dara.
Thank you, Kesa, for the great presentation. And once again, good morning, everyone, and thank you for joining our Q3 2024 Market Insight. And if you have any question, please feel free to drop in the Q&A box, and we will pick up and try to answer some of those at the end of the session. To continue from the previous session, I'm gonna cover first the hospitality market, where our team have picked up number of supplies in the top tier hotels, specifically in the 4-star and 5-star ratings. So comparatively to the end of this year, we expect no change or no new 5-star hotels coming to the market, and around 200 plus keys increasing for the 4-star. And this comparatively to the 2019, the number have increased about 60% roughly. And we all know that the hospitality sector has been impacted by the COVID-19 outbreaks and the drop in tourism. And to this day, as Ms. Kesa presented earlier, the number of tourists has not yet recovered to reach the peak level in 2019. And also the profile of the tourists are sort of different from the market back then. So probably that's why the number of new hotel, especially in the top tiers market, is not increasing significantly. Yep. In terms of the price, our team also noticed that there's slight increase, like we can see here, comparing to the Q3 of last year. The price of 4-star increased about 17%, and 5-star is about 14%, which is standing at slightly lower than 350 average room per night. So this are comparatively in terms of the tourist number based on the tourism statistic. We also see that number of foreign tourists coming to Phnom Penh increased about a double. So which this year, as of the 8 months, it stands at 1.5 million foreigners coming to Phnom Penh, while last year, 8 months, there was about 800,000 foreigners coming to Phnom Penh, and close to 80% of those are for holidays purpose, and around 20% are for business purpose. So that's probably one of the factors that drive the slight increase in price. And on the other angle, if we compare to our neighbor countries like Vietnam or Thailand, the average hotel ADR is around 120 plus per night, and the price for 5-star hotel is something not much different between Ho Chi Minh, Bangkok, and Phnom Penh. These are some trends that we try to pick up for the hospitality. So we see there's a spur in local demands, but it's more short term, especially when we have a series of the consecutive long holidays. So some locals are really driving a certain portion of demand, but that is short term and mostly not in the capital city, but rather at the provinces. And our team also noticed that hotel chains who have long presence in the market are now considering to unload their hotel portfolios in order to liquidate for the cash, rather than continue to operating. And another trend, we also see that amidst the rise of supply of condominiums, so some condominiums that completed are operating as daily stays, and that somehow have compete directly and indirectly to the hotel sectors, which could take up certain portion of the market share from the hospitality as well. Yep. For the last section, I'm going to cover about residential market in Phnom Penh, where we will combine 3 sub-sectors together that include condominium, landed properties, or locally we call Borai, and service apartment, where we cover grade A and B. So what we notice is in the this year's the growth of completion is actually slower, especially in landed properties and service apartment grade A and grade B, where we can see here the growth rate is falling under 10% year on year. And this is due to a few delays in completion, and as well as not a big significant new launch in the last 2 years. So that's why the number of new supply is still increasing, but the rate of increasing is not that high. And we think this is it's for the good because back then when the market was good, the supply was increasing significantly, and the demand growth could not growing fast enough to take up the fast pace of the supply growth. So with the growth of supply is slower, we think it's a good sign that at a certain point of time, the demand will somehow take up the excess supplies in the market for all subsector and residential. Yep. So on top of the note of the slower growth in supply for this year, we expect to see that the completion will continue to grow in a slower rate due to there are fewer new launch in condominium and landed properties. As we can see, a condominium witnessed a slower new launch in 2020, basically since the COVID outbreak. And well, from 2021 until now, until 2024, the number of new condo launch per year are falling less than 10 units per year. Meanwhile, the landed properties, we also witnessed significant drop in number of new projects launched, especially last year and expectedly for this year's, where the number of new landed property projects launched will be less than 20 projects per year. And we never seen this number before since 2014. On the other hand, if we look at the regional, in the Asia Pacific level, the residential sector actually still attract the investment, especially investment from the corporate levels. So this we are talking to the good residential market in the mature market like Japan or Australia, for example, or the alternative residential assets such as purpose-built student housing or co-living in the certain countries that are driven by a lot of immigrants, such as Australia, Hong Kong, or Singapore, and so on. So there's a kind of different trends where we would see in Cambodia right now, we are slower in new residential launch, but there's a strong interest in residential investment in the region. Yep. On this slide, I'd like to talk about the price, where in general, we don't see a lot of big movement in price. In condominium quoting sale price, we see dropping in high-end and affordable, and slightly uptick for the mid-range condo due to new launch projects. Yep. So on here, in the current context, it seems like price has become the key for the new launch projects, where we have witnessed even the few new launch projects, but if they are positioning their price right, they could still gather the buyers to buy the project. And for condo rent, there's not much change, but it's more sort of positive, especially in the high end and mid range condo rent. And this also we will present after that. We also noticed the increase in the residential inquiries and transaction, especially in the rental market. In terms of landed properties, there's not much movement. It's only small adjustment, which mostly less than 1%. And this also due to the not much movement, not much new supply or new players in the market. So it's kind of affect the price, the quoting price to remain stable. And service apartment, it's not big different from the condominium price trend. We witness few increasing due to the, like I mentioned earlier, is the increase in inquiries and transaction, especially in the residential leasing market in Phnom Penh right now. Well, we've been discussing among ourselves, like given especially the latest new launch projects in Phnom Penh in this years, where the offering it seems very good. The price is under 1,500 per square meters, so it's very good price and mostly come from established developers. And location is also very good in the capital city, Phnom Penh, which is Phnom Penh, within 5 kilometers from the CBD. So it's very good for traveling. Our country is freehold ownership. Payment term has become flexible, and we still have a good yield. So we've been discussing like where else in Southeast Asia beyond Cambodia we could find this kind of condo in the market. And probably even in Cambodia, let's say in the next 5 or 10 years, probably we wouldn't see this no more in the market. So this kind of an interesting points in the market, but yet we sometimes forget to take note on that. In the residential key trends, we, again, like mentioned earlier, price positioning has become a key to drive the take-up result for the latest condominium project, especially. So if the developer do the positioning right, so they might get a better result even the market is slowing down, because there's always a demand looking to buy the product with the right positioning, especially on the price. Although it may be difficult for developers, given the developer need to bear the existing costs like land costs or construction costs, which we haven't changed a lot. But it was to consider, to compare with if you want to liquidate or to get the cash, or rather than wait without big movement in transaction. So probably developers may consider to lower the expectations in terms of getting the returns, or probably developers need to have stronger capital base in order to compete in the current market. Yep. Yes, like mentioned earlier as well, we noticed the picking up in inquiries and transaction in residential, actually for both sales and leasing, especially in the condominium and service apartment market. We think this is because in the last 2 or 3 years, the price has been adjusted by the developers and landlord. Like we saw in the graph, the price has going down. So it's going down to the point that it gets the responsiveness from the market. So actually, it reached the point that the price really needs the target of the demand. So that's why we witness a certain picking up, especially in this quarter of 2024. Yep. Another trend to note especially in the landed property sector, we saw major top developers reducing their interest rate. For instance, a top developer reduce a typical interest rate for developer loan at 12% per year to 9% per year now, and as well as the loan, the developer loan or tenure is increasing from 15 to 17 years now to 19 to 20 plus years. So with this, and together with the ease of the government in tax break, like stamp duty exemption for the house under 70,000 US dollar. So it probably could ease to have for the market to have sort of a bit more transaction